What's going on, everybody? Welcome back to my YouTube channel. I hope you're all doing well and you're having a fantastic week. So today I'm going to be talking about the 4 most important criteria that every Forex trader needs to follow before entering a trade. And I think with real good structure and a good guideline in place, or should we call it a process in place, you will find that not only will your consistency get better, but you will start to become more profitable as a trader, because too many traders at the moment are just coming to the charts in the morning, executing trades without even having a process that they can follow and rely on. Without confidence, without having faith in your plan or your ability to execute that plan, then unfortunately there is really no hope for you as a trader in the long run. Granted, you might have small wins here or there and a little bit of success over the next 3 to 6 months. But unless you have something solid in place, a foundation you can build on, then unfortunately it's probably going to end there. So I hope you enjoy this video. I'm sure you will. If you do, smash that like button for me. Subscribe if you're new to the channel, and think about turning on notifications for when I next post my video. Until then, let's move on to the charts and continue to trust the process. So traders, we're on the charts now, and there's 4 things that you must really be focusing on as a trader. Now, personally, my trading style revolves around market structure, market behavior, and patterns. And I've kept it really simple because I think the more difficult you make it, the harder things become. The more things you have to look out for, you have to be aware of, and then, to be honest with you, it just becomes a never-ending cycle of, is this right or is this wrong? Personally, the way I see the markets is that the market's always going to behave in a certain way. You will be able to identify momentum when there's volume in the markets. Patterns are repeatable, and of course your entry style then just boils down to your character, who you are as a person, how you like to enter the market, and that one is obviously very subjective because everybody is different, but eventually we have to enter the market. So when we talk about behavior, what is it we're really talking about here? Well, we're looking to identify how price is reacting in certain situations. So one of those situations may be price reacting to a key level. The other situation might be where price is in a clear uptrend or price is in a clear downtrend. The other situation might be where price is reacting and creating patterns that we're familiar with. Let's say like double tops, double bottoms, triple tops, triple bottoms. It really doesn't matter. Now, that is how we identify behavior. Now, notice with these 4 examples, and I'll go into some more details in a very short period of time, but the behavior is identified not by the pair we're trading, not by the time that we're trading, not so much so the pattern that's forming, but how the structure of the market is reacting to certain situations. So let's say in a scenario like this, well, actually, let's move on to that in a minute. Just keep this in the back of your mind. The next thing that we're looking for is momentum. Now, some of you, or a lot of you, ask, how do you identify momentum in the markets? And I think you make it very difficult, to be honest with you, because if we really knew when there would be momentum, or we really knew when there would be volume in the markets, or we really knew the areas in the markets where we should be buying and selling from at specific times, then I don't think we'll be watching this video today. And certainly I wouldn't be making it. So I've devised a very simple way to identify momentum, and I will share this with you in another video. But for now, the simplest way to identify momentum is just by looking at how a single candle is moving. Now, when I say a single candle, I'm not talking specifically about your lower time frame candles. I'm talking about those that are looking at, let's say, the monthly, the weekly, the daily, and in my case, the 4H time frame. The reason this is important to me is because I'm usually at my charts 1 or 2 hours a day, looking to see if I can identify the behavior and momentum of the market to be able to get myself into a trade. So the momentum that I'm looking for is just a single candle's movement where price has illustrated either a very strong bullish close or a strong bearish close. And for most of you, you will know this as an engulfing candle. Well, yeah, I think that's it, an engulfing candle. Now, this gives me a lot of information because I know that if I'm looking at the market sentiment, and when I talk about the market sentiment, I'm talking about this information here, and I can see, let's say that on CAD Swiss franc, we had a really strong bullish candle close to the upside, and I look on USD CAD and I can see that we had a strong bearish candle close to the downside. There's a very high chance or high probability that the momentum that surrounds the CAD at this stage is illustrating that the behavior of the market, which could potentially be bearish or bullish in whatever scenario or at a key level, is more likely to either go bullish or bearish based on a single candle's close. And again, I make this point very clear. It must be a 4H daily, weekly or monthly time frame candle that you look at to be able to get that information. Anything lower than that, you're going to find yourself in a little bit of pickle. The next phase that we need to be focusing on is our patterns. Now, in terms of patterns, I can't tell you what works best for you, but personally, the patterns that I really focus on are patterns like double tops, triple tops, as you probably know, break and retest patterns, which in my opinion is just the go-to pattern for any trader that is new or old. We keep it simple. This is associated very, very closely to trend trading, or if not, this is what you call trend trading. And there are a few other patterns that I look for. But what I'm trying to illustrate here is not so much the patterns. This is the next phase of the 4-step process after identifying the behavior of the market, identifying the momentum, and then linking those two with a pattern. Now, the reason I'm saying this is because most people come to the charts and the first thing they look for is a pattern, or they jump on the charts and the first thing they see is a double top or break and retest, and they say, well, it's time to take a trade. They jump into the trade and they realize that the trade stops them out. Now, I know losses are part of trading, but what can be avoided is taking unnecessary losses, especially if the confluences do not line up with the behavior and momentum of the market. The next thing, and the most easiest thing at this stage then, is to figure out how you're going to enter the markets. The final phase would include things like stop loss placements, entries, the risk of that trade, and management of that trade. I'm not going to write it down, just take some notes. It's going to be your stop loss placement, your entry, your risk for that trade, and your management of that trade. That is something you need to consider as the final process. So just to recap this, behavior is number 1, momentum is number 2, pattern is number 3, and entry is number 4. And now we're going to take a look at an example. But before we do that, let's just understand the behavioral side first. So traders, we're just going to take a look at what I mean by behavior. And this is really important because, I mean, as this is number 1 in the process in getting to the final stage, which is your entries, this is something you need to be focusing on. And I'm going to illustrate it very quickly. A behavior in the market is resembled in 3 ways. It's resembled in price reacting at structure, which could be an illustration of price failing to break above. If we then have price breaking above structure, it could be an illustration of a continuation of the previous behavior. If we have price reversing off of this level, then we have a behavior where price is illustrating a potential reversal. I really am not going to go through all the scenarios here, because this is not what this video is about, but this is what we classify as behavior. The easiest way to identify behavior is identifying a clear trend in the market where price breaks above the previous structural high, creates a retest of that structure in anticipation of the behavior to continue bullish in line with that clear trend. And then you have your final behavior, which is very closely related to patterns, which again is a clear trend where price is doing what scenario 1 is doing, but then respecting structure and creating what we call a pattern. This is how we identify behavior. The momentum part is very simple. The pattern part is all down to you, and the entry, we've discussed the criteria for that. So I hope this clears up the behavior side of things. Let's move on to our example. Okay traders, so we're on Euro Yen now on the 4H time frame. I've come to the charts in the morning and there's a 4-step process that I need to follow. I need to identify the behavior of the market. So let's tick this off. The behavior of the market is clearly pushing bullish. That can't be argued. We can see price making a series of higher highs and higher lows. The next phase that I need to identify is there any momentum in the markets? Well, what we can see here is that when price pushed higher, price came back to this level, created a really strong momentum to the upside. The momentum then shifted and switched bearish because it failed to break the structural highs. But then you can see here in the micro scale is that for the last 12 hours, price has been failing to break below this structure, which from an intraday perspective creates a structural high, higher low. And when we have a structural high, higher low, what we anticipate the market to do eventually is make a new higher high. So with that being said, can we identify momentum? Well, of course we can. After price held this level for 12 hours, we had a strong bullish candle to the upside. We had a small pin bar here closing red, which could be significant. But moving forward into our trading session, we can see a very strong bullish candle close to the upside. Now, we have identified momentum. Now, this is something you'll have to get comfortable doing. Is this enough to validate a potential trading opportunity for you according to your plan? If it's not, then wait and be patient. Don't allow FOMO to kick in and make the decision for you. Wait until you can truly identify the momentum you are satisfied with. And this is a great example of this. So now we've identified the behavior of the market, which is bullish. We now have a new behavior that has been added to this potential trade idea as the previous candle has closed above the structural high. We also have a high, higher low formation indicating more confluence to this behavior and structure. And then we have the behavior of this market holding for 12 hours, pushing above the previous high, making a new higher high with a bullish candle close. So does that allow us now to scale down to look for our third criteria, which is the pattern criteria? Well, I think so, because we've ticked two boxes here. So let's head down to our lower time frame. So now we're on our lower time frame here, and we're using the 15-minute time frame. And what we need to do once we're down here is one simple thing. We already know from our higher time frame that the current behavior structure of the market is bullish. We also know that the behavior of the market is bullish, and now all we need to be focusing on is the pattern. Do we have to worry about what's happening on the 15-minute time frame? Absolutely not. It doesn't matter if the market seems like it's going bearish or if it's going bullish. Well, in this instance, bullish, it would be great. All we need to focus on is looking for a pattern. So now that we've identified that price broke above this structure and we come to the 15-minute time frame, we can see here a few things. The trend is up, which is fantastic. Price is held at a double bottom, so respecting the previous higher low. We now have price attempting to break above this structure, breaking back in. That's fine. It's just a pattern that we're familiar with. And now we have price breaking above this structure, and we can see here 4 15-minute candles. Now, we have wick rejections. Some people may take this trade, some people may not. But if you have in the back of your mind that we have identified that the behavior of the market is bullish from the higher time frame, the current momentum is in play, and we have a entry opportunity as part of our trading plan to take the trade, what do you think we should be doing? Well, we should be taking the trade. And somebody like me, I really do enjoy taking buy stops and sell stops, because personally I like to enter with the continued momentum from the higher time frame analysis, which we've just identified. And as part of the third step or process, I've identified my pattern. Now, for the final process is about my entry, and the way I think about this is this. This was the previous area in the market where price rejected. I have multiple wick projections here in this market structure. Prices finally broke above, and I believe as price is holding this level, this key level is significant. So my stop loss below this is where I'm satisfied. If price turns around and stops me out, then I'll accept the loss. And if price continues in momentum and breaks above this wick, then I believe that there's a much higher chance we'll continue to push bullish and make a new higher high. So now I've ticked all criteria. I've identified the behavior. I've identified the momentum. I have my pattern, and now I have my entry. Now, in terms of management, we're not going to go through that. Again, that's down to you, but this is the process that I follow every single time I take a trade. And the reason why I find consistency with my trading is because I have a step-by-step process. This four-step process is something that has allowed me to become extremely consistent and profitable as a trader. And I certainly know whether you use this process or you derive or make up your own process, you will find so much more success with your trading. So I hope you have found this useful. And if you have, again, please smash that like button for me. Turn on notifications, subscribe if you're new to the channel, And as I always say, continue to trust the process.